Okay, good evening, ladies and gentlemen. Another exhausting day at the gym today, so please excuse my downer sort of mood right now. Okay, just give me a moment, guys. I think a lot of the guys are just still logging in as we speak. All right, so in the meantime, let's go through some basic housekeeping rules. Okay, and I think the most important thing is number one, if you have a question, you can raise your hand and I'll be able to sort of like answer your question by unmuting your mic. I think the raise your hand buttons look a lot like this, right? Okay, so I think everyone should have logged in by now. If not, or you do happen to see this later, a bit later on, then you'll just go through the entire video. So if there's any parts of this that you might miss due to either me disconnecting, right? Probably a lot of hackers in this webinar. Okay, guys, but sometimes this Zoom Cloud meeting app just logs out, so I have to keep logging back in again, or because of connection issues, then you can just rewatch the entire thing from scratch. Okay, won't be discussing anything related to what we did yesterday, so obviously today is a new day, brand new day. It is Wednesday, 29th, day of the first month of 2020, and this is actually a beginner session, but we're taking some extracts from the advanced ebook, the advanced PDF ebook that we have, and we're looking at something that I feel is critical to understand and basically apply in your trading in order for you to become successful in any shape or form. Right. So, without wasting any further time, I'll jump right into it. So, if you do have 3 powerful strategies for successful trading, then all you need to do is just to open that up and just follow as we go along, or you can just follow on here and then just go read through everything at a later stage, right, once we're done with the session. Now, what we're going to be covering is pretty plain and simple, right, straightforward, and it has to do with your trading approach, right? A trader has a choice basically of how they trade, and a number of things may influence that decision. Okay, so one of them could be the amount of time or capital, or even the personality type of that person. Okay, or it could be a combination of all 3 things. Okay, now there are a number of factors that can lead a trader to a specific way of trading. However, the objective is always the same, right? To make some profits, right? So objective is always the same, has been and always will be. It's basically for you to make a bit of money with this new trading joint that you just recently started, or you've just been unlucky enough not to experience some consistency. So one of the things that you need to always look at is the approach in which you sort of like verify whether you have good trading, a decent trading setup, or if you don't have a trading setup whatsoever. Okay, so those are the 2 things that a trading approach will help you to decipher whether you have a good trading setup, a high probability one, or a low probability one, and you essentially force in the market. Okay. Now, the first approach in which we discussed is described as day trading. Now, day trading is one of the most intense, or rather the most intense way to actually trade for most of us, because it involves taking small incremental price changes, or looking for small incremental price changes in the market, and just taking as little as 1-2 pips, right? 20, 30 pips, sometimes 50 pips. Okay, it will depend on the currency or just the asset that you trade, but you're generally going to be looking at very small markets, or rather pips, that you want to take advantage of, and your close on your trades, right? The time horizon for day trades is usually very short, so anywhere between a second, right, to about 25 hours typically, which is less than a day, right? I'll explain why I said 25 hours instead of 24. Okay. Now, a swing trade is one of the less stressful ways to actually trade. All right. Now, as I discussed, day trading is much more intense. It's much more involved. There's a much more, I can say just intensity level involved with day trading and higher level of concentration which is required, and typically about an hour and a half to 2 hours of doing that consistently, sitting in front of your screen, not moving, and just looking for trading opportunities can become very I can say tiring, right? Especially on your mind. And obviously a trader with a tired mind doesn't really make any sort of profits in the long run. Okay, because sooner or later you're bound to make a mistake. So day trading, some people do thrive as day traders. Okay, doesn't mean just because it's high intensity, high pressure, it's not for everyone. There are people who actually perform better as day traders than they do as swing traders or position traders. Therefore, it's much more reliable for you to pick a trading time horizon that will suit, firstly, the amount of time you can allocate to trading. Okay, which is one of the most critical points. Now, it's very difficult if you have a full 9 to 5 job and what you need or what you do at work doesn't allow you to trade in between work, which is something I wouldn't want you to be doing in any case. Right? Imagine opening up a trade setup, let's say for 2 pips, okay, and immediately your boss walks in and says, "Hey, come and check something there for me," and you have to leave those trades right in the middle of a news event. Okay, let's say you weren't using a stop, whatever the case may be, but you'll miss out on a lot of opportunities and you'll make a lot of trading mistakes trying to trade while you're at work. Trust me, I've tried it and it didn't work out quite well. Okay, so if you're looking at scalp or you're looking to day trade, basically, what you'd have to do is to isolate a time where you are going to be comfortable enough for you to concentrate for that hour, 2 hours window or period. And right there and then, that's the only amount of time that you're going to allocate to your trading. You're not going to be looking at your phone during the course of the day and trying to place trades here and there, and you can't really see what's going on in the bigger scheme of things. And all you're doing is just trying to keep the needle moving, which is a very messed up way of thinking about trading, trying to keep the needle moving. But a lot of people will do that, and it puts a lot of pressure on the actual account itself because you're always going to have opened up positions, and that's when the margin call comes in. So rather isolated time. It could be in the evening. Typically, people who can't trade during the London and the New York session will go for the Asian session, which is pretty okay. It's just that you need to have a set amount of currencies that you trade, and those currencies need to be familiar. You need to be familiar with those particular currencies. Okay. Now, as I was saying, then looking for small pips. Typically, your trades are closed within the same day. Now, swing trading is one of the less stressful ways to actually trade and requires less screen time. Okay, so swing trading is one of the less stressful ways to trade and requires a bit less screen time than day trading. But swing trading is actually very profitable. Okay, can be much more profitable than day trading. I know the contrary belief is that the more you actually trade, the more money you can make. But obviously, just like with every single thing, um, that we experience, almost every single thing that we experience in this world, typically what feels right intuitively isn't what is right for us. Okay, having a, I don't know, full size 30 centimeter cake or whatever the case may be by yourself, chocolate, homemade, nice and warm. Feels good, obviously, right now, but it's not really good for you in the long run. It's not even good for you in the short run, but it just tastes good, that's all. So with swing trading, a lot of people believe that as a swing trader, you won't be able to make a lot of money because your time horizon is a bit bigger and the amount of trades that you're actually going to be able to take are going to be much limited, or are going to be limited rather, as opposed to scalping where guys can have these massive amounts of trades like 10, 15, 20 positions, right? And it looks cool for social media. It really does. I remember looking at those kind of posts back in the day and be like, wow, this guy can really, rock the market, so to speak. But I mean, as you typically might know, if you have any experience, I mean, social media and actual real trading, there's a lot of difference a lot of the time. So it's best to stick with what comfortable for you first and foremost, and then just try to build on them. Okay, make progress there. Now, swing trades will last anywhere between 2 to 3 weeks, rather 2 days to about 2 weeks, 3 weeks, which is great for training markets, right? So scalping is okay if you're going to be trading, let's say, a ranging market. So if a market is moving sideways like this, okay, so if you're getting this type of motion in that market, okay, then that typically means that you can scalp by shorting at these highs or buying at these lows, okay, and you're going to be somewhat safe as opposed to a market that is actually trending in one direction. And what you're trying to do is you're trying to pick this bottom by scalping, by taking 5 or 10 pips. Sometimes the market doesn't even retrace 10, 15 pips that you can actually get out of a short-term position. So scalping or day trading usually works very well in sideways ranging markets, and swing trades, less stressful. Okay, you sort of like take advantage of more pips, right? So a swing trade will typically be 150 pips to 250 pips. Okay, right now those aren't exact numbers, right? You can't typically say that exactly you're going to always get between 150 pips to 200 pips. You might get markets where a swing trade is 90 pips, right? And that's a swing trade. You wait for full 3 days for you to get 90 pips, and you might get markets where the swing trade will be 390 pips. So in 3 days, you get 390 pips. So those aren't hard numbers, right? Like I said, trading is not a science. It's more of an art than anything else. So there will be exceptions to whatever rules. So rather not put like fixed rules to every single thing that you apply in trading, more or less like sort of like guidelines. Now, position trading is best described as long-term investing, right? As the trades for long-term investors, it's for much longer time horizon. So we're looking at a few weeks to a few months or a few years. People who are looking to, let's say, buy let's say, Capitec shares right now and looking to let go of them, let's say, in 2025. That would be a position trade. Okay. Now, this approach is more synonymous, though, with stock trades or commodities like gold, silver. However, obviously, long-term investor mentality can be placed in the FX market as well. Okay, one of the more famous examples of that is obviously the infamous George Soros and Stanley Druckenmiller. I mean, those guys made $1 billion in a single day, and it's it's basically an accumulation of months and weeks and months of the market moving in your favor, and typically you're going to get between 500 to 1,000 to 10,000 to 20,000 pips, okay, depending obviously on the market that you do trade. So there is no more right market, if I'm even allowed to say something like that. But what you need to do is to typically look at markets in relation to yourself. So you look at markets and be like, okay, let me try this approach. Right? If this one makes me feel a lot of anxiety while I'm trading, then typically that's not the right one, the correct one that you should have. But if you feel a lot less anxiety when you're swing trading, right, you're hitting your numbers and you're more confident as a swing trader, then it's time to drop day trading and just focus more on swing trading approaches. All right, you're looking at markets that actually go somewhere, looking at trending markets, and what you want to focus on is just a core belief that the market will always make money available, whether you swing trade, you day trade, or you position trade. The markets will always make provisions for you as long as you are a good trader. All right. So, guys, any questions? Okay, no questions. Okay. If there are no questions, all right, you can. A few guys actually text me on the Telegram channel, no, on the WhatsApp business line, and obviously I wasn't handling the line at the time. But I did see your guys' messages, and I will be making sure that the emails get forwarded to you to install that piece of software, or the indicator rather, that we spoke about yesterday. So I'll make sure everyone actually gets that. Now, regarding signals, as I mentioned, the signals are no longer free. Okay, signals are no longer free. I mean, they've been free for about 5 months, 4 months, and it's a bit awesome, right? A lot of guys making money. Obviously, the guys were around when the signals were still free. Don't mind paying for them, okay? Because they obviously been making some money from the signals. But for the new guys and new gals who are interested in the signals, just text through on the same WhatsApp number, right? On the link, I'll send the link in the Telegram channel along with the recording of this particular video, and just make sure that you ask whatever relevant questions. Okay. As I said, with the way that we structured the signals, I mean, you have entry, you have exit, how to manage the trade, and obviously the PDF, which I've already placed in the Telegram channel, which tells you how much you should be trading for whatever market that, for whatever account size that you actually have. Sorry. Okay. Okay. So if you have a few things that you actually want to ask, you can do so on that, right directly through to the link. And I did mention that there will be one-on-one coaching, right? So the one-on-one coaching is only for 5 guys. I think at the moment there are 3 guys for next month, and that's going to be for the entire month. So I'll work with like 5 guys for 1 month, strictly focusing on what their strengths are, their weaknesses, checking their accounts, right? Looking at where they entered, where they exited the market, and working on their psychology. And obviously, we're going to be sharing some nice software with them to manage trades and that sort of stuff. So I mean, I've always valued one-on-one coaching because typically that works a lot better. Obviously, I would say that because that's how I learned how to trade, right? I had a person trade right next to me each and every single day, which is what I'm trying to accomplish here, right? Obviously, because of time issues, there's over 650 guys, I think, in the group, 630 guys in the group. It's very difficult for me to say I'm going to have one-on-one sessions with everyone. So it's only going to be 5 at the moment. Let's see how it works out. I might increase the number to about 10 as time goes by, as long as it doesn't affect all the other stuff that I'm actually involved in at the moment. Okay. So if there's nothing else, no questions whatsoever, guys, I will see you tomorrow. Yeah, tomorrow we have a session in the evening about 7 p.m. 6:55 or 7 p.m. I'll send through the code so you guys can just log in. All right. Make sure you read this entire PDF and ebook to make sure that you are ready for tomorrow's session. So Thank you very much for you guys for coming through for tonight's session, and I will see you tomorrow evening.